Hello, 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 ladies and gentlemen. Welcome. My name is Pyotr Yordanov, and I am your Harry Potter of the financial markets. I'm doing this video because I want to show you how you can use an unusual RSI strategy to actually go with the trend, not against it. And you can apply this on any asset, on any time periods, but I will show you how using it, you could have been long on Ethereum all the way back at $333. I mean, maybe a little bit less too. But that's how exciting the strategy is. If you take it and you complement it with your fundamental analysis, you could have even more confirmation. You can even have more entries that you can take to add to your position on something like Ethereum or Bitcoin or the next big thing, whatever it is, because I've tried this on Shiba and it also works on Doge and whatever you want to take out there, it works because it's irrelevant. It will always go with the pullback and it will put you on the riding train to the moon. Woohoo! What you're seeing right here, just a quick shout out. You're seeing right here the dYdX exchange, which is the first of its kind decentralized perpetual futures contracts. I mean, there is some competitors right now out there, but this is the most sophisticated and most advanced and most importantly liquid out there. Maybe they're not the best fees, but you could, I mean, get reduction in fees if you have staking in the token, etc. But as far as I'm concerned, it's just exciting that we have such sophisticated derivatives in a decentralized fashion on the blockchain. However, my analysis and my explanation of the strategy is going to be made on Quant Tower. This video is, I mean, it's beyond the scope of this video for me to tell you why we're going to be using Quant Tower and how to use it. Let's just say I'm using it. And most specifically, I am using a custom-made indicator right here called the RSI chart, which is going to highlight to me only which is only going to highlight the candles on which you can go long. So let me just show you real quick. We are looking at ETH USDT future on Binance futures. Yeah, because we have to go back in time a little bit. I mean, when you're doing long-term analysis, doesn't really matter what you're looking at, which exchange you're looking at. They're all very similar. And you can always come back and confirm on the actual dYdX chart, on the Binance futures charts, whatever it is you're looking at. What matters is that you find a signal, you execute the signal, and you just, hopefully make money. So you can see that you had signals here, here, and here, and that is around 330. Oh, sorry, there was something lower. At 219, as low as 219. I mean, maybe I can go even back in time and have even more interesting signals like over here. But you get the point. So here's how the strategy works. If you notice, it is not telling you to enter short here, like you would expect from the RSI strategy. It does not tell you that the price is overbought or oversold, and now you're going to go short or go long against the trend. It tells you as much as it can to go with the trend on the pullback, on the pullback, on the pullback. Sometimes pullbacks are a bit too short, too early. Yeah, I get it. I mean, this strategy is a little bit too sensitive for price movements, but it's like really cool because you could get here and get here, etc. So the trick is that you want to be using a period of 2, not 14. Yeah, I know some of you are going to be like, oh my God, 2 is going to be too much. Yeah, sure. But hold on. You will change your ranges, your boundaries of the RSI to 5 and 95. And if you're a little bit more aggressive and you want to get these purple candles, you're going to go with 10 and 90. Now, just to clarify, this strategy was created by Larry Connors and Cesar Alvarez. And they did create it to trade on the S&P futures when there was no cryptocurrency at the time, and they went long only. It's from them that I got it, so it's not my strategy or anything. But I did adapt it heavily to the crypto markets. They don't really like the 10 and 90. They find it to be a little bit too fast. I like it because I like being aggressive. If you're a more conservative trader, you just wait one of those signals. Just be advised, the more you increase the range, the less signals you will get, the more maybe frustration you will have because you would have missed something. That's something else. It's about psychology. We're not talking about this over here. So they speak about it. They don't go short, and most importantly, they don't put a stop loss. Yeah, we're gonna be putting a stop loss, not because they're wrong, but because they're wrong. No, not because they're wrong, but no, but because they don't put a stop loss because they're going long on the S&P. The chance of the S&P going to 0 are, I mean, it means the US economy just dissipates. I mean, we've seen collapses and, bear markets in the US economy, but chances are relatively low. So you're safe staying with long and not having stop losses. But here we're dealing with crypto. No, 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 no. That is very risky, especially when you're going short. I don't have to tell you. When you're going short, the sky's the limit for how much money you can lose. Because the price can just like increase 1,000%, 10,000%. What's the maximum we've seen in cryptos? 1,000,000%? I don't know. That's how it is in cryptos. So you want to be careful. We will be putting a stop loss. I will show you how. There's a couple of ways of doing it, but I'm going to show you only one of them. And there's different ways of exiting. They, in the book, are more aggressive in their exit. I like to be a little bit more conservative, especially if you want to go long term, as I will show you in a moment. So, first of all, RSI 2, 5,495 or 10,90 if you're a bit more aggressive. Second, most importantly, you need something to tell you we're looking at the long-term trend. No, you need something to tell you what the long-term trend looks like. Yeah. So like, if you want to go long when the trend is up, you want to ride the wave. We're in crypto, right? I mean, to the moon. You want to know when the moon might be starting and ride it as much as you can. And you want to know when the moon is over and you want to start riding shorts. Like, there is no short on the daily. But maybe here you would have had a short on the hourly. If you're more of a scalper, you want to take another position. If you want to, you could be definitely taking. I can absolutely see a short coming in here, coming in hot, and then like taking all the way down. I mean, that's not a lot. Maybe that's 10%. Maybe you could make 5% of the trade. Money is money, though. And when you're trading futures, you can be leveraged. You can make money on that. So you want to make sure you're going with a trend. The Larry Connor's book speaks about the 200 SMA. I personally like more the EMA compared to the SMA. I like 233 as a Fibonacci number instead of 200. It really is, as far as I'm concerned, a matter of personal preference. Take any moving average you like with the period that is long enough. Like, don't take a 21 or a 13. I mean, that would be just shooting yourself in the foot. Just take a long enough term, the long enough moving average. Even take the Hall if you're more fan of it, but maybe take it to 500 or weighted moving average. And take any of these, slap it on the chart, and make sure that if the price is above it, the RSI is below 10, you go long. If the price is above the moving average and the RSI is below, I go long. Why am I showing you the worst possible signal? Let's restart over here. The price is above the moving average and your candles are here and the RSI is below, as you can see here with the price, it is below 5. You go long. Yes, you go long here too, but you'd be losing. That's actually one of the only losing signals on this whole time frame, on these whole 3 years. All right. So there's a couple of ways of entering, and that again depends on your personality and how aggressive you like to be or not. Either you enter on the close of the candle, or you enter on the low of the candle, or you enter on the high of the candle. I mean, essentially anywhere but the open, which the close, the open of the next one. Depends on how you look at it. So when you're going with the close, it's the most aggressive. It's like you're saying, I want to be in as fast as possible. You just risk the price is going to go against you. You also risk that if you're buying the low. If you're buying either the low or the high, you risk never being filled. If you never get filled on the low, you're missing on an uptrend. That's a bit sad. If you don't get filled on the high, well, maybe that's a good thing, like over here, because then you will not be getting filled on a loser. But then again, you will never get filled, and so you will miss on a potential trend. That again depends on your style and your personality. Next, the stop loss. There's really 2 ways of doing that with the stop loss. You could take the ATR. I'm a big fan of it, created by Mr. Wilder, same guy who created the RSI. You take it right here. You see you have an ATR of 171 multiplied by 2. Let's just say that's 300. You get all the way to 300. Right here. Woohoo! Where was that 300? Yeah. So like if you open at the close of the candle, whew, that is a very tight stop loss. I mean, that will put you over a week in which your wife better not talk to you, or girlfriend, or whoever it is, or boyfriend, whoever's in your life, because you're gonna be under for a week, and you're gonna be so close to being stopped out. Yeah. So that's where your stop loss is. There's another way where you could say that I'm gonna add to my position whenever a level of ATR is broken, but that requires you to be much more conservative with your money management, and it's beyond the scope of this video, to be honest. So I'm just giving you a hint. I might speak about it in a future video. Subscribe to my channel. Oops, sorry. Yeah. Yeah. So, and then let's say, as far as take profit is concerned, there's a few strategies. Larry Connors speaks about as soon as it closes your way, just take profit. You know, it's a scalping strategy. It's fair enough. I don't like it. It's just too conservative. It's just too fast. There's another way that says, well, the moment the price, the RSI goes the other way, I close. So, you know, you entered long here. I see another side here going above 95. I sell. I mean, obviously, you won't be making a lot of money, but here you'll be making a lot of money. Here you'll be making money. In that horrible example, you will not be making money. That's, by the way, an interesting example where if you wait to buy above the high, you will not have to suffer from this. So again, you see how that looks like. But the problem with you exiting really fast is that you would have exited here. You would have made 13 bucks. Yeah, 13 bucks, 0.69. Sorry, it just happened. So, which is 5.99% up from that entry. So like the problem of this approach is that it is a very fast one. It will leave money on the table. However, if you're algorithmically trading or if you're scalping, that could be very exciting because it could take you in and out very fast. Granted, you will be paying lots of fees, so maybe it's not actually a great thing. But one other way of dealing with it is, and as I mentioned at the beginning, we're looking at a daily time frame. Which means daily time frames usually are long-term investors. You're looking at the longer time frame. You are buying here somewhere in 2020 in January, and you want to try and ride this guy, you know, to the moon. You know, you don't want to be buying Shiba and making 5% when it's going to make 2,000%. So you want to try and ride it. And there's multiple ways of riding such trends. There's advanced techniques using highs and lows, etc. But a simple technique which is still in a way advanced. You could, you know, of course, you could wait for a close below the moving average, like here. You would be leaving a lot of money on the table. Or when you see something like this, that the first touch of the moving average, the 200 moving average, which is your reference moving average, you take the high, you take the low, you take the half, you exit there, for example. Or you just combine this with fundamental analysis. It's really, the art of trading is in defining where your stop loss is, your sizing, and your take profit. That is something that the strategies, like in the book by Larry Connors, by the way, does not tell you, because that is very personal. And it depends on your style, it depends on your performance you're looking for, it depends on the time frame, because you cannot go all in on a tick chart, which is a very fast chart, because you won't be filled. And even if you were, fees will eat you up. But here you might be like, fine, I will buy everything I can get my hands on because I'm just, you know, a small guy with $1 million Dogecoins who wants to go long on Ethereum. Yeah. Or you could just ride it. Or you could just say, you know, when I see this, I'm going to go to double top. I'm going to go all the way to here. So like if you bought at 230, you just, you know, took yourself out at 4,000, making like a whopping, you know, a lot of percentage. Like a lot of percentage. Your wife would be happy. And if on top of this you leverage, whew, that was going to be good. Even though, be advised, that if you're trading on dYdX, you're going to be paying rollover fees. On any actually futures exchange, you're going to be paying rollover fees because these are swaps. But that is beyond the scope of this video. So, ladies and gentlemen, let us recap what this video is trying to tell us. What is the strategy all about? And how do we go about it? You need a moving average long enough that is going to be your reference of the trend. 200, it is up. We're above it. We're long. In other words, here, we're long. If anyone tries to go short over here using this strategy, they're either high or they're not disciplined. Or they just, I don't know. But just to give you an example, if you were to drop on the hourly, for example, we're looking at the 1 hour, you have a lot of interesting short signals. You have a short here, you have a short here, you have a couple of shorts here, you have a short here, a very painful short here, and you have a short here. You even have shorts, not so clean right there. So you do have potential for shorts, but you need to make sure, that you are below your reference moving average. That's all there is. Once you are below it, you just wait for the RSI to be above 95 or 90, depending on your aggressiveness. Then you short. You put a stop loss at 280R or your DCA if you're courageous enough and you know how to manage your money. And then you take profit either when you see an RSI on the other side. That's probably better when you're shorting, just to be on the safe side. Or you just hold it if you're a holder and you look at the long-term time frame, or you just wait for the price to maybe come back towards you or to give back 50% or whatever it is. You do something more advanced. There's a million ways of skinning this cat. What matters most, find something that sticks to you and to your personality when it comes down to stop loss, take profit. But for entry signals, it's very clear. Can I hear you say it again? That's right. Above the moving average, below 5 we buy, below the moving average, above 95 we sell. That's it. Simple. Easy. Not so easy to execute. That being said, I would like to thank you so much for taking the time of looking and watching this video. I hope this strategy is useful for you, that it can be profitable. I know it is profitable to me. I know I have deployed it on algorithmic systems. I'm quite excited about the performance it's doing. And if you like what I'm doing, just check me out on YouTube. My name is Pyotr Yordanov. You can see it written right here. I don't have a lot of subscribers yet. Not so many videos yet. But that's it. So without further ado, I wish you best of luck in the markets. Most importantly, have fun. Bye-bye.